You're crazy if you don't have any physical gold yet. The warning signs have been there. Yeah, I know. They're all talking the bubbles burst, right? I don't know what the hell they're talking about. This is actually the last downturn cycle. Very short term. It might actually go below 1,500, but I'm not 100% sure what the heck it's going to do because it's a very much news-driven market. And, anything Brent Bernanke says or any stats that come out could drive prices one way or the other in a very short term. But in this year, it's going to follow up and it's going to do very, very well. So, and if you don't have any, you'd be crazy not to buy any. That's actually Mark Farber's advice, too. Very, very solid advice. The only one I trust right now, period. And I'm going to reveal a couple things. Basically, how smart he was. He's a lot smarter than the rest of them by far. A lot of people look for alternative media news. They don't trust the major media. And I was a little curious about Business Insider, which is an online publication basically that pulls up a lot of different news stories and have various writers and contributors. It seems to be like a true free press. They're not putting out the major media slant or anything like that. So I was a little curious, did a little research just for your information. This actually is probably a very good alternative source. Although they cover so many topics, if you're looking for gold and silver news, you'll have to do some digging probably, but it's there someplace. Various stories. Business Insider is a U.S. Entertainment business news website launched recently, February 2009, based in New York City. Founded by the DoubleClick founder and former CEO Kevin P. Ryan. And basically this guy seems like a maverick. And he's been under some kind of criticism as to how they put things together and maybe use some third-party sources and things like that. But this seems to be, to me, free press the way it should be. The alternative media seems to be garbage too. I'd rather listen sometimes on CNBC than someone, depending on who the heck's talking. If it's one of the actual people on there, the idiots, I never listen to them. Like I stated, I usually listen to Mark Farber, Jim Rogers. This is actually a little spiel about physical gold, and basically people use this argument to knock it. It goes on to say, this is from Peter Hugg, director of Kitco Metals, right? Probably everybody's familiar with them. People buy physical gold usually for one of two reasons. One is privacy. They don't want anybody to know they have it. Very good reason. That's a legit reason, I think. Secondly, this is the one I kind of laugh at too. They're worried because newsletter writers since the 1980s have been saying the government's going to confiscate your gold, the world's coming to an end, and you're going to need gold to barter for various things. Well, that, who knows? I don't put too much faith in that one. It could be someday, who knows? But the first one, I think that has a lot of validity. And I want to point out, people don't know what individuals have for precious metals, but you know what? You think the elite aren't buying? And I could state to you that actually our Forbes list that shows all these numbers and stuff like what the elite are worth, the top 400 people in the United States, the top 400 in the world, I'd have to say it's inaccurate. I've seen a number of things that would indicate that because I've seen people had billions on just what I knew about, and sometimes it was just cash, pure cash. And I'll give you an example. I'm not going to reveal anything here, but it was a small dentist not in the United States, in Canada. So, that narrows it down a lot, right? Small office, four employees, four. You wonder how much this guy can make. I don't know where he got his money from, but there was something we're trying to put together. There was some kind of investment, and he was able to produce a verifiable CD that had 1 billion euros on it. Proved. You look up the number on it. It was all legit. So I don't know where the hell he got that money from. Looked like a little. I'm not going to say what his name is, obviously, but if you look up on the Forbes list, he ain't on there. And I've seen a number of things like this. See, the wealthy can hide money in a lot of ways. It could not. I don't know how the hell that's hidden because that's actually recorded someplace, I assume. But they can hide it through artwork besides precious metals. It could be gemstones, it could be jewelry, it could be sculptors, it could even be in land, because land is held at the lower of cost, or not market, it's held at cost. So the market value can go up. Now, you could also state, well, he bought land and all these trees grew on it, and now the hardwood's worth $3 million, the land was $200,000. You're not going to revalue the land and hold the asset much higher because some trees grew on it that were valuable now, or maybe they discovered resources on the land, or possibly because of other infrastructure that built up in the area, the land is worth a lot more. So a lot of times, nobody really knows what people are worth. Even that Forbes list is not well known, is not accurate. But this first reason about privacy, they don't want to know everybody they have it. That's a good reason for holding physical gold or physical silver or physical palladium or platinum or whatever. That is a very, very valid reason. That's smart. And actually, that's what a lot of people do, I think, that are wealthier, because they seem to have... I came across a number of things. I was surprised that there are some people who have some tremendous wealth, and they should be pretty high up on a list for Forbes, and they're not even appearing on it. So, and I actually came across some things back in the early 80s about when I worked in place that, the information, the people I was kind of bumping into were, family of the people, billionaires and stuff. Not that they pay you any money, but, they would, reveal things that they were much higher up than what the Forbes list stated, even though they were top 100. This is something about Mark Farber, and this is kind of interesting because I talked about the Forbes 400 list, and a lot of these people aren't investing in gold and silver. But in 2000, Mark Farber advised Bill Gates to sell all his Microsoft stock and buy gold. If Bill Gates had followed Mark Farber's advice, Bill Gates would be richer than the entire Eurozone except for Germany. He would have Gates land. He would own the whole Eurozone except for Germany. So, who's smarter? I don't know. I'd have to say Mark Farber is. And he does stick with his doom predictions more than anybody. But I don't call them doom predictions. I call them reality predictions. Because really why the economy is going down is not because of even the hyperinflationary scenario. That's part of it. The other part of it is the bureaucracy. Actually, most of the jobs are BS, fluff, putting up with bureaucracy. There's a lot of labor, intense mental labor involved with, all the different reporting requirements, SARS, and all this type of stuff. And you need to do these things because they're the laws. So what do? I mean, there's a lot of effort that goes in those areas, and it's not really about producing real goods and services that people actually need. So that takes a lot out of the economy, probably more so than the Federal Reserve could with printing too much money. Now, as far as the Federal Reserve printing too much money, yeah, I think they have. And I got to comment on something, because we're not going to go into Zimbabwe-type inflation right away. Could that happen later? Yeah. Yeah, it depends on what Brent Bernanke does. I know I heard that thing about Peter Schiff saying that Ben Bernanke is going to basically print, then we're going to go into hyperinflation. That could be. That's something I kind of feel that'll happen. And the reason I say this, because this is how it's happened before. This is where central banks lost control. This isn't going to happen in the next year or two, though. That's the thing. They've been saying this, and it's like, I don't know if it's going to happen. You're going to be able to tell. You're going to be able to tell before it happens. I'll be able to tell, because it's going to be quite obvious. What happens, though, when they print a lot of money, what happens is the banks hold it. They hold it back on it. They keep it in reserve. They don't spend it. They don't lend it. They don't invest. They just have a lot of cash reserves. Actually, our banks in the United States are flush with cash. Now, the derivatives bubble can wipe them out somehow. I don't know. I don't know how that works. But they are flush with cash. If they decided to actually go hog wild into something, in the economy. Once that money comes out behind that dam, what can happen is that's where you get hyperinflation. It's the velocity of money. That it's not how much money you print. If you print a whole pile of money and everybody's got, you know, piles of cash and they're not spending it, it's just sitting in. Say they got, you know, rooms full of $100 bills in their houses. Everybody does. It would not become hyper. I'm going to give this example because it would not be hyperinflation until they go to spend it. That's what'll start driving up the price when it actually starts getting out and circulating in the economy. And see what's going on right now. A lot of money is not circulating that fast. The velocity of money is low. This is actually where central banks screw up because people are uncertain about the economy, which includes the people that are running the banks, people that are running large businesses. They don't want to expand. They don't want to lend money. They don't want to invest in new things because they want to wait it out, see what's happening. And what happens is they basically hold back, hold back, hold back. So what does the central bank do? They print a little more, try to stimulate the economy a little more. Well, they keep the people on the top, keep holding the money, keep holding it, holding it. Then all of a sudden it builds up to a critical point and it starts coming out and it gets circulated in the economy fast. That's why sometimes you'll always see deflation precede hyperinflation. Now, I'm not sure if we're going into hyperinflation, but if Ben Bernanke really does a hard round of QE, yeah, it could. As of right now, we're not. But it might take a few years. Could be. You have to see as it's going along. Ain't going to happen this year, though. Nope. And this is from Peter Schiff. People are so worried about European debt that they're just buying the U.S. dollar. People are buying the dollar not because the U.S. is sound, but because the Eurozone is worse shape. That's an easy thing to understand. Eventually, the world is going to understand that the U.S. is broke and they're not going to keep buying our currency. Yeah, I know that. It's very simple. But, one good sign that things are falling apart is that China had to be given direct access to buying U.S. bonds directly without going through Goldman Sachs and J.P. Morgan so they could be front run on the markets. So they're trying to keep China very happy about buying bonds because they're trying to hold back on QE. But eventually China's going to say, screw you. But, considering they had to make that move, that means stuff is starting to fall apart. Now, what does that mean? Ben Bernanke is probably going to act even more. See, Mark Farber's probably got this damn thing 100% correct. He says as long as that guy's in charge and all those other types of people are in charge, he's holding on to his gold. Gold is actually going to get way ahead of other assets. It's not going to follow. It's going to go into a bubble, just like George Soros said. It's going to be the ultimate bubble. Now, I don't know if that's going to be a good thing for the middle class because I figure this is the way the middle class is going to play it. They're all going to jump on the bandwagon at the end and get caught holding the bag, and then they get slammed. That's what's going to happen. So, I'm not one of those people, but that's probably how it's going to work out. Now, as far as when to sell, it's going to be very difficult to ascertain because it's actually a moving target. It depends on a number of things. But obviously, gold is too cheap right now. And even though I think it might go below that 1526, 1522, those two test marks, it's not going to go to some of the stories they were talking about last week. They were talking about gold was going to go to $700 a couple weeks ago. Some of these things I was reading, $1,100, $1,200. No, it's not going to do that. They're on crack. Every time it goes down, you get all these predictions that it's going through some wild number. When it goes up, they predict a wild number on the high side. I don't know if they're that stupid or what. I mean, they shouldn't be financial anybody writing anything or doing anything, and I don't know why people listen to this garbage, but it's totally incorrect to think that gold is going to go down to like $700 or $1,100 or some garbage like that. It's not going to. And the reason you could tell that is because Ben Bernanke will act very aggressively. It's going to actually go up. It may pull back below the 1526 or that 1522 we had in December of 2011. It could do that, but it'll be brief. It'll be brief. There's a couple things on the horizon that may cause that to happen. Now, I want to talk about something else, the industrial hemp. I talked about this before because actually this gold and silver game is not going to save the people's wealth. It's going to save some of the people's wealth. If all the middle class bought this stuff, it wouldn't really do them too much good. Actually, real wealth is production of goods and services that people need. Industrial hemp could be a very vital commodity that could solve a lot of problems. Pollution, the energy problem, food, lack of resources. It could be used in place of steel. It could be used in place of plastics. Even medicine for medicinal marijuana oil. Now, if you want to know how the elite could screw you on that, simple. Because, I'm not, I don't know, I would assume they're already thinking this. But say, for instance, everything's like an agriculture product like that becomes the #1 commodity in the world. It replaces oil as the #1 commodity. Well, we might say our money's based upon that, but how could they charge you money? How could they have a steady income stream? And if everybody's allowed to grow industrial hemp or whatever, and it's a small industry driven and large industry driven, there's no monopoly on anything. Anybody could do it. Simple. Through this commodity called water. Water will be the next oil, and that's the thing they're going to charge people for, even the people that are farmers and all this type of stuff. The elite know how to get you. And the whole game is, if you really want to outsmart the elite, what you need to do is constantly think, not get lazy, and look at all the angles. And that's how you can outsmart them. But if I was the guy on the top trying to say, what can I do to get a steady income stream from the insects? That's what they're called. What you do is you find another resource that they absolutely need. Water to be perfect. Because actually there is a number of shortages of water throughout the world that's potable. And you need it not just for people, but for growing food. So that's going to be the next oil. Sounds crazy, but they're going to find a way. Now, be vigilant. You can actually hammer them back, but don't be vigilant like in the Alex Jones style, because he's just a rabble-rouser. Just use your head and tell them to go to hell. Just don't cooperate with the bullshit, because water should be free. That's the way I look at it. None of these games, because money seems to, once you get controls on things like that due to environmental crises of water, they're going to charge you forever. So, just want to point that angle out too. So, going towards true wealth, look at all the angles. But for right now, if you don't have gold, you're going to be screwed up big time. But you know what? People getting screwed up is the reason people that will have gold are going to go doing fine. It's not going to be a net sum everybody wins. It's going to be a net sum that some people win and most people are going to lose. So, I don't know, gold is not actually the solution for the overall economy. Deregulation and getting rid of a lot of the bureaucracy is actually more of a solution for the economy. Gold right now is an extremely smart investment. I don't know about shorting gold right now. I'd be nervous to do that. It might go down somewhat, but it's going to be bouncing around due to stories coming out from the internet on, Reuters and all this type of stuff. So depending on what they want to emphasize that day, that's how the markets are going to go down. And I'm not 110% sure if it's going to go below the 1500. So, but if you don't have it, you should buy more.